In the past month, the price of Bitcoin has fallen 40%. Who would have predicted that? Investor Beat starts now. Thanks for watching. I'm Chris Hill, joined in studio today by Morgan Housel and Mike Olsen. Guys, our top story, Janet Yellen made her first appearance before Congress as Fed chief. She stressed a great continuity in strategy as she takes over for Ben Bernanke. And Wall Street liked what it heard. The Dow, Nasdaq, and S&P 500 all rising today. Continuity, I'm assuming low interest rates forever, free money forever. What are we expecting from her?
Yeah, we're all hanging on Janet Yellen's every word today when she goes before Congress, but I think in reality, everyone knows basically what they're going to say. There's very rarely big surprises when a Fed chief goes before Congress. They measure every word very carefully. But yes, I think in general, you should expect more of the same that we saw under Ben Bernanke. Low interest rates, gradual tapering. But it's always the case with every Federal Reserve chairman, or now chairwoman. She actually wants to be called Fed chief, not chairwoman. That they earn their salary during crises, not during times like this. So in Paul Volcker's first year as Fed chairman, there was a huge spike in interest rates. Alan Greenspan's first year was the crash of '87. Ben Bernanke's first year was the housing crash. So let's see what happens with Yellen this year.
Wow, I was feeling really good till you just said all that. We've talked about this before, though. If we see this increased tapering, the Fed slowly withdrawing from the public markets, that's going to put more of a spotlight on the companies to actually produce results quarter in, quarter out.
Right. So, I think that there's kind of an interesting misperception with respect to what the taper has or has not done. At most, it has underpinned confidence in markets, but really, I don't think that we can say unequivocally or with any real certainty that it has done anything to support companies' results. And moreover, if the Fed is withdrawing support, which they've been eminently clear that they will only do this if and when they believe an employment recovery is afoot, that's going to mean much better times for companies and the consumer. So, I would take that for the blessing that it is if it happens.
All right, let's get to some of the day's movers and shakers. Fourth quarter profits for CVS rose 12%, and the company raised guidance for the current quarter. So I guess anyone worried about the $2 billion in tobacco revenue that they're walking away from, looks like we're looking pretty good for CVS.
Right, so they had a fairly good quarter, but the big news with CVS in the last week is obviously the cigarette store. They're taking out all cigarettes from their stores. Mike and I were talking this morning, what does this mean for the company? It's infinitesimally small to the bottom line. And not only that, but I'm sure if you looked at cigarette sales at CVS over the past 5 years, they don't break that number out, but it's almost certainly been on a decline. So not only is this a small share of their profits, but it's probably a declining share. It's really not that big a deal for the company to move them. And of course, now they're freeing up shelf space to sell scratcher tickets and soda and candy bars, other things that don't harm people's health.
They're going to have the big bottle of Ernest and Gallo wine behind the counter now.
Let's go shopping after this. In its fourth quarter, Sprint lost both money and subscribers, but not as much as Wall Street was expecting. Shares up, so everything's good with Sprint, right?
Yeah, I just don't really understand the excitement here. A smaller than expected loss is still a loss. And the reality here is that I think if you're to take a long-term view, Sprint is engaged in kind of a race to the bottom. They don't have the advantages that a Verizon or an AT&T have, which is that they have this huge swath of customers against which they are able to scale the costs of their spectrum and negotiate better costs on handsets. So you think about how Sprint has competed against that. They've competed on price, and they're also at a cost disadvantage. What happens when they go ahead and try and turn the tide on that? Because you can't make this up on volume infinitely. It's not a good situation. What Sprint really needs is they need to do a deal. The industry and consumers could benefit from a strong number three, but they need scale in order to do that.
Groupon shares falling after the Daily Deal site announced that the senior VP for product management is leaving the company. I don't know who this guy is, but is this an overreaction to one person leaving?
I had never heard of him, but apparently he's worth 10% of the company's value, which seems absurd. So I would say, yes, I think this is an overreaction. You never want to see employees, especially key employees, leave any company. But the fact of the matter is there's turnover in these companies. I highly, highly doubt this guy was worth 10% of the company's value. So I'd say this is an overreaction. I'm not necessarily bullish on Groupon because I think the evidence is pretty overwhelming that it benefits these deals benefit their customers less than people originally thought years ago. So I'm not necessarily bullish on the company, but I have to say this is most likely a big overreaction.
It definitely doesn't benefit Groupon as much as people thought it would either.
Definitely not. And finally, Rackspace Hosting closing in on a 52-week low after posting what one media outlet referred to as exceptionally weak fourth quarter results. Oh, and on top of that, the CEO is leaving. How bad is this?
Yeah, so you know the kicker to all of this is that the CEO said, or I'm sorry, the new CEO said that on the heels of the previous CEO's departure, they are going to pursue a more software-focused strategy. That, in as much, acknowledges the very commodified nature of their core offering. I don't know why anybody's surprised about this. This is a stock that was trading at absurd multiples to its earnings for the longest time, and they deal in a totally commodified space. What do? They sell server space to consumers. They've sold it at a very marked up price, and for some reason or another, the market thought that they could resume, or they could continue this growth for a very, very long time. Don't get it.
All right, that's going to do it for today's action. Give me a stock I can put on my watch list.
Markel, it's a very well-run insurance company, and not only that, but it's also cheap right now. It trades about 1.2 times book value. A well-run company that's also cheap today. That's rare in today's market. It's a fun company to watch. I own shares.
Speaking of companies that are tied to one employee, Tom Gaynor at Markel, that guy's a rock star.
He would be someone who, if he left, I could see shares down 10%.
All right, Mike, what about you?
Also own Markel, also love it at these prices. The one I am looking at right now is Boardwalk Partners. Now, this company is a little bit more ugly. They took an 80% haircut to their distribution. That's MLP, or partnership terms, for a dividend yesterday. This on a pretty nasty decline to their distributable cash flow. Now, Boardwalk, what do? They own natural gas pipelines and storage facilities. Basically, this should be a steady-as-she-goes business, but it's not, because the area where Boardwalk's pipelines and storage facilities are located, the economics of drilling them at current natural gas prices, not so great. So as they've been renewing contracts, they've been under pressure. It was pretty clear that this dividend was unsustainable. In fact, we talked about it on Market Foolery a couple of weeks ago. I thought there would be a small cut, but it seems like they did kind of a baby out with the bathwater move here. Shares got absolutely killed, 46% off. Fundamentally speaking, I still think this is a pretty good company, and so this could represent a decent entry point. What worries me is that I don't know how management got caught so flat-footed that they had to cut the distribution 80%.
All right, that's going to do it for today's show. For Mike Olsen and Morgan Housel, I'm Chris Hill. Thanks for watching. We'll see you tomorrow.